So it's Sunday morning, and I've just woken up to the news that the US has bombed Iran. Or more specifically, they bombed Iranian nuclear sites. Our no-war president in the US has, he's very close to getting us into another war. So the question really is, there are lots more important questions than this, but I work in finance. So the question for me is, what could happen in the markets tomorrow? Now, before I answer that question, I just want to preface this by saying everything I'm about to say could definitely be wrong, just on the basis we've got a really crazy market right now. For example, we had all of the tariffs at the start of the year. We had a brief dip and then they came back, but a load of downward pressures and negative volatility, or things which should cause negative volatility in the market, have occurred, and yet the market's fairly flat. If you were to suggest that the US put ridiculous tariffs on the whole world and then took them away, even though they took them away 10 years ago, you would likely to see the S&P 500 fall by at least 30-40%, but it just hasn't. Now, when it comes to looking at the Middle East, the main thing in global markets that the Middle East does is it produces a bunch of oil that the rest of the world buys. And traditionally, because of this, whenever we see conflicts in the Middle East, threatening the oil supply is essentially a threat of global inflation caused by a spike in oil prices. And when we have a spike in global inflation because of a cut of supply of oil, well, the first thing to know, or it's kind of obvious if you think about it, is oil gets more expensive and people have less money to spend on other things because they've got to spend money on oil. Prices of other goods will also go up because we typically use a lot of oil to transport them and sometimes make them. So this could make everything get more expensive. Again, we've had so much inflation the last 3 years. And really, the crucial thing is whether the Strait of Hormuz is going to be closed. Because in response to these bombings, Khomeini has called for the Strait of Hormuz to be closed. And for those of you who don't know, the Strait of Hormuz is essentially just a patch of water in which a load of oil is transported out every single day and then sold into world markets. And if the Strait of Hormuz is indeed closed, then this is going to cause oil to spike. It's going to cause company prices to drop massively because all of their goods get more expensive, plus all of their consumer base has less money because they're spending more money on oil, and it should cause a large drop in equity markets. So what do we do if that's what happens tomorrow on Monday? Well, hopefully you're holding low-risk assets which are resistant to these events. If you are clients of Stayden Financial Management, my clients, then you will be, because we don't really recommend having any portfolios without at least a little bit of hedge in there. And in that circumstance, I'm going to advise everyone to, if you don't know me, I love contrarian investing. I love contrarian. So really what that is you go against market sentiment. So if we see the price of gold, for example, spike, all of my clients who have gold miners are going to have a nice little email from me saying, now's a good time to sell those gold miners. And then we're going to look at all of the assets which have dropped massively. If they have, my guess is going to be high-risk tech or high-risk assets. We're going to see which ones we like and then pick them up at a really nice, juicy discount. Because as a long-term investor, we've got at least 5 years at the very minimum if we're investing in equity markets. And we're going to look at these discounted prices now and an opportunity to buy them up as cheaply as possible. So really, we're looking to sell our low-risk assets by our high-risk assets. It sounds simple, but honestly, for a lot of people, it's quite scary because, the US just bombed Iran. So I think tempers are quite high. Now, whether or not all of what I've just said comes to fruition, again, is basically rooted in whether the market's going to behave sensibly to this news. If this news happened, 10 years ago, I wouldn't be at all cautious in saying we're going to see red on the markets tomorrow. I'm sure we'll see a bit of red at least. There'll be at least a substantive drop. But do I think the markets could fall 30%? Yeah, they could. And in that case, you should absolutely be selling low-risk assets, buying high-risk assets. Do I think that also the markets could only fall a couple of percent? Absolutely too. You know, it's a very irrational market out there. But yes, so that is a very quick estimation of what's going to happen tomorrow. And now you should probably think about all of the more important questions, like what does a war in the Middle East mean for human suffering, which I'm going to think about that and get very upset for a bit. Anyway, I've been Luke Staden from Staden Financial Management. If you are looking to get impartial financial advice or investing for your future, please arrange a consultation through our website, Staden Financial Management. Have a lovely day, if you still can, on this news, and take care.